Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second bearish black crow yesterday after the previous session's reactionary bearish black crow and bearish closing black Maribozo. Prices dropped down and closed below the bright green lower time, currently 113.22 of the late February to mid-May bullish Andrews pitchfork, halting just ahead of the July 2023 high at 112.76. Earlier, this bright green lower time was roughly parallel to the overhead broken but still influential dark blue late February to early May uptrend, currently at 115.22. Now, I will likely downgrade the dark blue uptrend and finesse the bright green bullish Andrews pitchfork into a shallower bullish shift pitchfork for now. We ended up at the bottom of a fairly quiet area between the July 23 high at 112.76 and the overhead June 2020 high at 114.22. Beyond the June 2020 high, we have the bright red neckline extension, currently at 114.62 of the important August to September 2020 head and shoulder top. This bright red neckline extension effectively capped the market back in April, along with the January 22 high at 114.82 and the February 22 high at 114.95. And it looks like it's doing the same now. Looking below, we have the 2023 high at 112.13 and then the possibly ominous rising green short medium moving average, which is coming up at 111.62, entering the frame just above some congestion at 111.39. Finally, as I've said now repeatedly, we are set up with just 5 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'd be on. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. And so far today, well, an interesting follow-on low to yesterday's action, punching down through the July 23 high and down to the 2024 high before turning back up and looking like a hammer pattern right now. It's usually seen as a bullish pattern, bullish reversal, but we'll see. Cable, aka sterling against the US dollar. A second bearish black crow after the previous session's immediate countering bearish harami and bearish double combination. We also have what I suspected yesterday, a pipe top at the start of this week. Overall, the market has pulled back lower from trying to push up through the congestion between 134.83 to 136.43. Overhead, we still have the February 22 high at 136.43 and then a fairly free area until the January 22 high at 137.48. Now further down, we still have the interesting purple neckline extension. That's currently at 134.24 of the small but influential mid-November to early December 24 reverse head and shoulders continuation pattern. Even further down, under the 2024 high at 134.36 and the purple neckline extension, we have a seeming free zone until the congestion between March 22 high at 132.98 and the 61.8% Fibonacci line of the June 16 to September 22 move at 132.46, plus the shallow rising neckline extension to the recent small head and shoulders continuation pattern, which is currently 132.38. Okay, so we are now set up for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday the 31st of December 2025 either over 127.29 or under 125.11, then we'll be on. Anything in between, we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are now set up to achieve one. So far today, a further move lower, below the 2024 high and the purple neckline, but not by far, and not by too long either, as the market has reacted back up towards today's open and looking like a sort of indecisive doji star pattern right now. US dollar against the Japanese yen. A second bullish white soldier yesterday after the previous session's very interesting and somewhat unusual key reversal. The market pushed higher, closing over the 50% Fibonacci line of the January 23 to July 24 move at 144.58, and well back within the breach late April to mid-May ascending expanding wedge pattern. Overall, we are still also well within the big picture bearish item, which is the bright red July 24 to January 25 bearish Andrews pitchfork, with the bright red upper time now not too far above, currently at 145.58, and the middle time now well below, currently at 130.28. This pitchfork, though at one point breached and since repaired, continues to show the bearish angle attack of this market. Additionally, the other pattern I previously pointed out, which is the whole February to date action, even the whole mid-January to date action of a descending expanding wedge pattern, well, that is still there, with the bright red upper time making up the upper trend line and the pink lower trend line, currently at 134.56, of the well highlighted early February to late March descending wedge pattern making up the lower trend line. For the earlier ascending wedge pattern, I have laid out some targets below just in case. We have a primary nearby target X at 141.95 and a harder to reach secondary target X1 down at 138.35, and a tertiary much harder to achieve target X2 down at 136.45. These are now under threat from the market reverting higher, but for now I'll still leave them there. So far today, a strong attempt higher, though prices have since pulled back significantly. The market pushed up through the bright red upper time, as well as the nearby declining short medium moving average, currently at 145.62. Above this, we have the lesser Fibonacci line at 146.69, which is coincident with the March lows this year. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross yesterday after the previous session's second bullish white soldier. The market was effectively bracketed on the top side by the dark blue neckline extension, currently at 719.83, of the late August to early November 24 reverse head and shoulder pattern, as well as congestion formed from the May 2020 high at 719.64 and the 50% Fibonacci line of the September 22 to April 25 move at 719.91. Whilst below, we have the bright red lower trend line extension, currently 718.36 of the late January to late April descending wedge pattern. Now looking further below, we have little until the congestion in the 714.48 to 714.95 zone. Whilst overhead, we have the lurking flatlining gold long moving average, currently at 722.5. So far today, a little dip towards the bright red lower trend line, but more interestingly, a sharp move up over all the overhead resistance between 719.64 up to 719.91, but it's not been sustained so far, and right now it's looking like a possible shooting star pattern. The pattern, a pattern that's actually seen traditionally as bearish. However, if prices move lower and maintain the downside, we could have a key reversal, possibly a key reversal down. US dollar against the Brazilian real, a sixth countering bullish engulfing pattern after the previous session's fifth countering bearish double yesterday. Apart from this countering each time, verging on being a bit silly now, it is nevertheless demonstrates the significant indecisiveness, an intraday indecisiveness rather than an intraday indecisiveness of this market. This all continues to come at a crucial level as the market earlier thrice pierced the key 560 even level, which, as well as the shallow bright red lower time, currently at 564.62 of the mid-August 24 to early April 25 bullish shift pitchfork. Plus, we also have the recently finessed purple May 24 today uptrend below, currently at 560.22. Though I need to reiterate that I don't think these, apart from the 560 even level itself, may be that good as supports. And it wouldn't surprise me to see them being tested again. Add to all this, we have mixing with the market one significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Whilst topside, we have the green flatlining short medium moving average, currently 572.18, and a little further up, the December 21 high at 575.78, and the declining mauve medium moving average currently 577.56, and also the flatlining gold long moving average currently 578.31. Finally, please bear in mind that we have a monthly key reversal down here for April, and that all things should be seen in the shadow of this pattern. US dollar against the Mexican peso. A bullish opening white Mariposa yesterday after the previous session's second indecisive pattern, which was an indecisive doji cross, but one that was also a key reversal up, if a somewhat unusual one. Prices recovered up to test the overhead resistance between 1936.27 to 1940.68, and away from testing the support zone below between 1920.38 to 1915.03, and that's made up from the 50% Fibonacci line in November 2020 to April 24 move and the March 2020 low. Now, beyond the overhead congestion, we next have the 2021 low at 1953.63, the April 22 low at 1971.68, and then the declining short medium moving average currently at 1980.08. Overall, this is still a follow-on low from the overhead very wide congestion band that eventually became a rectangle top pattern and is centered on the September 22 high at 2057.65, stretching roughly between 2017.20 up to 2083 even areas. It's also worth bearing in mind that April became a monthly key reversal down. Now, so far today, the market is seemingly caught within the 1936.27 to 1940.68 congestion area right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.